We're heading over now to China. That's where the governor of Nigeria's central bank is, in Beijing. And earlier today, we heard of the major decision to try to increase on their forex portfolios, introducing Chinese yuan. Governor, thanks for your time.
Thank you very much, Lerato. How are you?
I'm fine, thank you. Okay, so the rationale of increasing the portfolio of currencies in forex to the yuan, what's informed that?
Well, you know, Lerato, we said this about a year ago, that it was something we were looking at. And as you know, China has been going on gradually with its internationalization. The offshore renminbi market is very liquid now, and the renminbi is fully convertible in Hong Kong. Recent developments have given us an added sense of urgency. Europe is facing a big crisis. We know what's happening with Greece. Spain, Italy have been unable to increase taxes. Countries are in denial. Nobody knows what's going to happen to the Eurozone in the short to medium term. The United States budget deficit is a big problem, and therefore we feel it is time to make this move now. We've been working on it for a year, and we think the time is now. We can't delay anymore. And it is inevitable, I think, that the Chinese renminbi will be a second reserve currency in the near future.
Were you panicking a little bit, Governor, particularly after S&P downgraded the U.S. currency? Was that sort of the signal for you that this is the time to act?
I think it was part of it added urgency to it, but I mean, look at Europe today. You've got a 350 billion euro problem in Greece that is not going to go away. You've got Italy and Spain unable to push through tax increases that they need to fix their budget deficits. The Germans and the French cannot bail out Europe. Europe is sitting on a keg of gunpowder as far as we're concerned. The U.S. deficit, now with the job numbers, you know, it's a source of concern. So we do think it is safe to start moving away at least some of the reserves from these currencies and start looking into the future. So strategically, while the United States will remain a very important economy and the dollar will remain a reserve currency for some time to come, I think you're going to find more and more countries looking to the second largest economy, which is better managed and which seems to have much stronger fundamentals.
Let me challenge you on the notion of it's safe to start looking away from the dollar and also the Chinese economy better managed. Many people would say it's a managed exchange rate, so you're not really sure what the value of the yuan is. And also the fact that China is a major creditor to the United States, having really bought out a lot of their treasury bills. They're exposed to the volatility of that dollar. Some would question the wisdom of your actions on the basis of those two things. How do you respond?
Well, the first thing is, if you're talking about the exchange rate being managed, in what direction is it managed? I mean, the consensus seems to be, given the level of reserves that China has and the level of exports that it has, that the RMB is undervalued. Now, if that is the case, then that is the time to buy the RMB, because then the likelihood is that you will have an appreciation. And if you look at what's happening with the fundamental strategy of the Chinese, there's a gradual diversification away from exports into the domestic economy. If you look at the latest numbers, for example, manufacturing numbers, exports did come down, but the slack was made up for by domestic consumption. Now, as China moves away from being too dependent on exports, and I think the Chinese do recognize that they cannot continue depending on the United States and Europe, and they've got to now look at their domestic market, you're likely to see an appreciation of the renminbi. So the likelihood is that the renminbi is more likely to appreciate than to depreciate in the future. So I don't see how this decision can be faulted on that score. As for China buying the United States, being exposed to the U.S., I don't expect the U.S. to default on its debts at this point in time, but certainly the quantitative easing in the U.S., very low rates of interest, would mean that there is an adverse impact on the value of Chinese reserves, but they've got huge reserves, and I don't see that being a problem in the short term. On the balance of the risks, I think it makes a lot of sense to start moving into the renminbi, not moving totally out of the dollars. The dollars will be important. Euro will still be important, but I think the over-dependence on the US dollar is something we've got to look at.
Let's talk about managing risks finally, Governor. As you've acknowledged, you'll still have to be transacting in US dollars. You'll still have to hold a significant proportion of your reserves in dollars, largely because the oil price is determined in dollars and a lot of Nigerian imports are dollar denominated. Considering the fluctuations that exist, what we've seen on the Naira-dollar exchange rate, how will the move to the yuan act as some sort of a mitigating factor for you?
Well, one thing is, of course, that there is a significant amount of trade happening between China and Nigeria. And the Chinese government has, over the last 1 year, introduced a number of reforms in the management of the renminbi. For example, today, the Chinese government does allow settlement of transactions in RMB. Chinese companies can invoice in RMB, and they can purchase in RMB. So we can, for example, have a situation in which, and we have already allowed Nigerian companies who want to import from China to settle in renminbi. So that begins to address some of the exchange rate risks. The Chinese government has recently allowed Chinese companies to actually outflow investments in RMB, and we would allow investments to come in RMB, so that will be a source of supply. We are planning to go into a swap arrangement with the People's Bank of China. This has been done by a number of Asian countries and Latin American countries, which will give us a stock of RMB, which we can then sell for purpose of settlement of transactions. The Chinese government is issuing bonds, creating a yield curve, and that is an opportunity for investment. So given the size of the trade between Nigeria and China, and given the fact that we expect that to grow, settlement in RMB would be one good way to use the liquidity and hedge the exchange rate risk there. We don't need to go through the dollar.
Okay. Thanks so much for your time and enjoy the rest of your stay in Beijing. Lamido Sanusi, the Governor of Nigeria's Central Bank.